The fundamentals are fantastic, and so don't fight it. These things are finally picking up on their promise of like hitting these huge TAMs. You're starting to see like some evidence of that. It's like you're gonna start seeing these revenues come in, and like, why would you fade it? Like, why would you say no? This is silly. Once traditional industry's finally coming here and spending money, and now you want to disregard it, like it just doesn't make sense to me.
A quick shout out to today's sponsor, Katana. We'll hear more about Katana and their ongoing pre-deposit campaign later today, but for now, let's get into the episode.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of 0x Research. Today, I'm joined by the classic trio. We've got Bach, Boccaccio Mode, Bach, and Ryan Cashflows Connor. Sorry,
My
Bach.
nickname sucks, dude.
I mean, we could do like Salve, Boccaccio Mode, Boccaccio, but I don't know if it doesn't hit as hard.
The Salve.
Salve.
Hello.
And we've got Cashflows Connor's back on. We've
Howdy.
missed him.
Good to see you
Ryan.
guys. Good to be back.
Last week, Ryan, I kind of I spilled the tea a little bit that we needed you to have a break for a week or so. Your lines were getting a little repetitive, revealed versus data preference. So we wanted you to kind of hit the grindstone a little bit, come up with some new ideas, and come back fresh. Hopefully, that's what we get today. I want to jump in with you though. You missed out on the live stream. We had David Hoffman on from Bankless last week. We talked about ETH comps to like global GDP, things along these lines. I know you were a little upset about that in the Telegram, but the main thing I want to get into is this like concept that we're experiencing a revenue meta. I think that's kind of been an idea that's been floating around on the timeline. That we're in a revenue meta that's somehow a temporary thing. I'd love to get some takes here. I think maybe one of the big takeaways for me, just to start things off, is like, just given how the crypto markets have been historically, like a lot of retail participation, a lot of like narrative driven things. We've historically not really been in a strong position of like evaluating fundamentals, but that's been changing in, the recent months and years. I guess I'm just curious on your general takes about, the current revenue meta that we've entered.
Yeah. So first on the me being upset about the ETH valuation stuff, I'm not upset. I promise you, I'm not upset. I do think though that like we're just trying to help, right? Like, I think the criticisms, if we didn't like ETH the asset and we wanted it to keep going down, we'd let them keep doing the things that make it go down, like not generating any revenue and then having these silly um, marketing pitches which aren't going to work with institutional investors, right? So we're simply pointing out the flaws, and like that probably means that you want people to change. So it's not with like it's not we're not doing it to shout at the crowd and tell them they're wrong. We're trying to right the ship, I think. So that's like kind of the one point I wanted to make. With respect to the revenue meta, like, yeah, I think, look, when I started in crypto, or when I started poking around, you couldn't find that data. It was impossible to find, and people were kind of like investing on the only thing that they had, which was like incorrect TVL data. Like, at best, you had it for a handful of assets, and we were all kind of, the whole industry was kind of confused as to what these things, like the correct valuation framework for these things. But that's becoming increasingly clear as these things generate revenue, and the revenues more often or are increasingly flowing to the token. And if a thing has cash flows, you can value it on the basis of those cash flows. So I think the revenue meta is framing is interesting because it like highlights the weird path dependency of crypto. Like, path dependency can be a real bitch for a large like a large subset of investors. They can get really because path dependency is so unpredictable and moves so slowly. Like, it could force you to take your eye off the ball. So like, I think of like TradFi with respect to tech. Tech started out as really volatile and risky. And then like as late as 2016, 2017, there were still people in TradFi, professional money managers, who were saying that like Google's too risky. Yet like Google's revenue during the great financial crisis fell like 3%, right? Like it stopped being a risky asset because the fundamentals of the business changed. Like global advertising went on to Google. It became an incredibly sticky and predictable business. And the path dependency there, people got lost in it. They couldn't handle it. They thought that things were never going to change because tech was risky, therefore tech would always be risky. And I think the revenue meta people are doing that with revenues, right? They think it's this temporary thing, or they think it's just another narrative that we're going to cycle through, when in fact that's just how it works. And we're finally there in crypto when we've matured to the point where we can start looking at revenues. And hey, it's a new game, and you got to adapt.
I think I generally agree here, and it seems like what you mentioned with tech. I mean, it feels like the path dependency of crypto has. Seems like we're primed to maybe play out some of those kind of outcomes again, where you've got early, maybe more unsophisticated minded, or just like early retail investors thinking that the game can continue on like indefinitely, just like on a pure narrative, like no fundamentals basis. And then maybe you still have folks on the, maybe institutions who avoid due to concerns over risk, even as like revenues and growth and fundamentals of some of these assets like really pick up and improve. Um, One thing, I mean, kind of a joke, but like I'm excited for the growth meta. I can't wait for that one. Um, probably a few other metas that are primed to come along. I think we could probably walk through like investing 101 and pick up all the different meaningful acronyms. Like let's have the cash flow meta and just walk through some of these things. And I think that's probably how we're primed to kind of go through the next couple of years, honestly.
The EBITDA meta is coming. It's coming.
I have kind of a different take on this. I agree with you guys, obviously, but I've said this before as well. But in crypto, we like, because I think it's very retail dominated. We overcorrect a lot. So what's probably going to end up happening is everyone's going to be circle jerking to revenue, when the reality is like revenue's only part of the game, and then there's a lot of other stuff to consider. That you need to look at. Like even in, please correct me if I'm wrong, Ryan, but even in the
I
traditional,
will.
even in like equities, it's not always about purely revenue and fundamentals and stuff. Like there's clearly a lot of narrative driven price action, narrative driven price action, speculation driven price action. I mean, yes, obviously it's very difficult to like value that. And I don't mean like we should go off of store of value type of plays the way that some people are arguing for. But what I mean is like if you're, I'd say like a regular investor, you probably shouldn't overcorrect and only index on revenue. And because crypto's still like, it's still very heavy news driven, very heavy narrative driven. So I think there's some things that people should continue to consider and continue to do. Although, like in my mind, it's like 90 last cycle. Let's say it was 90% narrative speculation driven. Now it's like I don't know, 60%, 40%, and the remainder has been filled up by fundamentals and revenue, as opposed to like it hasn't all gone away. I think, my personal opinion.
The interesting thing is that in TradFi markets, um, the narratives all tie back to some sensible framing of value. And the valuations don't get silly, right? So like as a crypto person, you should be planning for that future state. And
Valuations don't get silly.
Is
They get a little.
Circle's
they don't. No, they don't get silly.
is
They
Circle's
literally don't.
valuation silly today, or is that like normal,
A circle. I don't know what it's trading at. I
or
haven't
like
been following.
Palantir?
160.
So, right, but these are the outliers that we can all point to, that are easy to identify, um, and probably like Palantir, like I was actually trying to load Koifin before this. For some reason, it's like I feel like it's like down today. I'm getting like request failed stuff. So whatever, I can't pull up the comps for Palantir. But no, it all kind of makes sense, and you have a band on these things. So like I think it was in the .com bubble, and Amazon was trading at 100 times sales, and it was framed as the most expensive piece of equity in human history. I'm only aware of another public company that traded that high, which was Snowflake um, in besides like micro caps that no one pays attention to. Like Snowflake traded at 150 times sales when it went public, and for a lot of 21 and 22. And so like that's kind of the upper band, whereas these things trade at like insane valuations on like tens of thousands of dollars in revenue. So you get like this absurdly high multiple, and like so like there's a band, right? And even the things that do trade on narrative or trade in some mostly reasonable band. There are forces pulling it to where it needs to go over the long term. You even saw that with like a GME, right? It eventually came back down to earth. So like you're seeing that in crypto markets today, where the things are eventually coming back down to earth. You're seeing them find a fundamental floor, or trying to find that fundamental floor. So it's not as pronounced. You don't get a 10x in a month in TradFi, because there are forces that will right the ship, or correct the misvaluation.
Yeah, that makes sense. I think that makes sense. I think that's a good point.
Yeah, I mean, broadly, I think that's fair. I was trying to force the convo in that direction a little bit with the outliers, but I think you make a point here. It's like, I don't know if you can't have a whole industry full of outliers. So naturally, you would expect that there can be a Bitcoin, there can be a this that, but it can't be thousands of assets with billions and maybe trillions of market cap.
Yep, I totally agree. And also the fundies are fantastic. Like, why is everyone fighting them? Hyperliquid, Solana, a bunch of the deep ins now are like
Is
it's not
fundies
even comparable.
fundamentals?
Yeah.
I thought it was like fund managers. This is a revelation to me. Please continue. Sorry.
I've been
Like what?
slacking fundies to you for like 15 straight months.
I was like, why is this dude super into Faya Capital like that?
Um, Yeah, that's not false. But yeah, so yeah, the fundamentals are fantastic, and so don't fight it, you know. These things are finally picking up on their promise of like hitting these huge TAMs. You're starting to see like some evidence of that. You're seeing like really cool announcements coming out of DeepIn. Hive Mappers had a bunch. They have a bunch of Fortune 500, and are going to announce some Fortune 20 companies. Like you're going to start seeing these revenues come in, and like, why would you fade it? Like, why would you say no? This is silly. Um, like once like all this good stuff starts happening, now you want to like, once traditional industries finally coming here and spending money, and now you want to disregard it. Like it just doesn't make sense to me.
I think a lot of people are also scared though, because a lot of tokens don't look great, but they
Yeah,
trade very
I
well
agree
on
with that.
narratives.
I agree with that. And then you get stuck. You wish you were playing a certain type of game, and then it's not that game anymore. Like in like 2022, that it sucked because the game changed.
Yeah.
A lot of the macro data changed. The things that got rewarded in the market changed. Growth outperformed forever, and then value started outperforming, and it was like, shit, the game is changing. Like now
Yeah.
these old stuffy companies are doing well, and yeah, it really sucked to be a part of that environment. But you have to use your reason and be like, hey, what's going to happen going forward? And as a growth investor, you see what technology is doing and how it's going to enable just these massive outcomes and more efficient companies. But then so that's like why you would flip from value to growth on the TradFi side. But in crypto, it's like, use your reason. Most assets trade in a certain way. Crypto starting to trade in a certain way. Most capital on planet Earth, values things a certain way. And to fight that, I think you're hurting yourself.
Yeah. I think it's gonna be increasingly difficult for, like, if you're an Avalanche fan, Polygon fan, Like these are tokens that have historically traded on narratives, that have traded very well on narratives, but now there's a big shift towards valuation, revenue, whatever. And then they kind of struggle. They don't really have anything backing them. Like it used to be, oh, we're making a partnership with Starbucks, or oh, we're building out institutional subnets or chains or whatever. And then nobody cares about it anymore because we kind of know it's not real. Like I think before there was like a very slight chance that it was real. But now it's like, okay, if it is real, who the fuck cares?
Yeah, you would have wanted to see some traction in the numbers, and to not see that show up. Like I think a lot of the prior cycle, like larger projects are, it's kind of easy to maybe sift through some of those where it's like, this thing is still at, X billion valuation, and yet the network is like a ghost town type of vibe. They're going to have a tough time, right? Unless they can turn that into something like, I don't know, Charles Hoskinson can only be so loud. I don't know, unless the network can turn some revenues out of its picture. The other thing too is like we're at this transition of like narrative to fundamentals, but we're also at this transition point of like tokens being worthless to tokens having that value actually directed to them. So you kind of have to like sift through those as well. Like in some cases, something could be generating a revenue, and it's not going to the token. So you have to ask yourself that second question of like, is this worth investing given that consideration?
Yeah, you got to get familiar with the disclosures and the value accrual mechanisms, and people are waking up to that. I mean, but the funds, it's like, who are we talking to, right? Like we're talking to retail in this very moment, but the funds know all this stuff. It's not new to them. Every investment manager is on board, and if you look at the Coinbase data, who's trading the most on that platform, who's doing the most volume, is decisively funds. Right. So we were in this interesting moment for a while where retail was most of the volume, but I think we're seeing increasing evidence that probably isn't going to be the case. TradFi is 75-25. So we should normalize toward that over some time.
Yeah, that makes sense. It is still retail driven though. Ryan Connor has to admit this.
It depends on which asset. Like Bitcoin's probably not retail driven anymore.
No, it's not.
I don't know. I could be wrong on that, but I think you have to think about it asset by asset.
Like Bitcoin's probably like 60-40 maybe 75-25.
There's a ton of ARB funds in the U.S. that are, and RAs that are buying that thing or moving the price. It's not what it used to be. I think Mike showed a chart of like the parabolic BTC moves over time, and they were so violent and up and violent and up, and now this last one is like kind of just like a grind. It looks a lot, and the volatility's come down. Bitcoin's volatility was like 150% annualized. Now it's in the 30s or the 40s. There was a period in 2025 where Bitcoin's realized volatility was lower than the S&P 500. So you're starting to see like this asset normalize.
Yep, you heard it here, folks. Bitcoin is better risk adjusted compared to the S&P 500. Put your money in it.
Make the biggest trade of your life. All
Take
right.
the biggest fucking risk of your life right now.
This episode is sponsored by Katana. If your assets are sitting idly, they're dead. Katana is built from the ground up to bring your bags back to life. Get started with Katana by joining their pre-deposit campaign before mainnet launches at the end of this month. Follow the links in today's show notes to get started. This episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Follow the link in today's show notes to grab your Ledger now. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I think another trend somewhat related is what we're seeing with like this crossover between centralized exchanges and decentralized exchanges, this like CEX-DEX kind of relationship. We've seen it with Binance and like BSC chain. We've seen it with Coinbase and Base, and what they're doing with like permission pools, and also just like these integrations with the exchange, and then just like stuff that happens on chain, like the Morpho integration that they have for getting loans against BTC. Bybit also just recently announced this weekend, I want to say, ByReal or ByReal, incubated by Bybit, born on Solana. They're launching a DEX, but like multi-product DeFi platform, it seems like, on Solana. So you'll have a DEX here using CLMM and RFQ hybrid routing, but then also a launchpad, some vaults for yield. Like they're seems like they're maybe a bit serious here about actually having like this on-chain multi-product DeFi platform. I think that one kind of raises some questions about like, I thought Mantle was maybe supposed to be sort of like their chosen location, but perhaps like just lack of traction. Like, I don't know, they just see that activity is happening on other networks. Like maybe you should just go to where the activity is. But either way, I think it's interesting to see this continuation of this trend. Coinbase has been like making moves here, right? Their Morpho integration, they're like starting to play around with their announcements around them using like UniV4 hooks to do permission pools. Basically like connecting more of what's happening on the exchange, like the centralized exchange for customers, to like an on-chain kind of backend operation here. So it's like connecting their on-chain and off-chain like liquidity and trading. I'm curious if you guys had any thoughts about this in general. Like, to me, one of the big things, like I would just expect every exchange to go in this direction, but the thing we've seen in the past, right, is like launch a chain, own the chain, get the users on the chain. It's interesting that they've chosen to go with Solana here. Binance has BSC, Coinbase has Base. Does this make sense for them? Is that like the right move?
It's free money. Like that's literally it, right? It's free money. Like I'm sure either Solana did some form of incentive for them, or they're just gonna make money on fees. Like it's free money, so why wouldn't you just launch on Solana? But I think that's it. I don't know about the Bybit game plan, to be honest with you. They are a big centralized exchange. I think they're right above OKX. By the way, I only take Binance, Bybit, OKX, Kraken seriously because I think the other ones kind of fake their volume. So I think it's right above OKX. I mean, they're clearly doing something. I know their like card is actually used quite often. They're like the Bybit card. So I think they're just like trying to expand more and more the same way that Coinbase is. I don't know if they're trusted as much though, so we'll see. And with the Mantle thing, I mean, like if there's nothing happening on a chain, you can't really launch a swap on a chain because since the goal is to make some form of money, so I don't know. Like you can't no, but it's true. I don't know. I don't have any hot takes on this because it's like, to me it makes sense. Like if you're gonna launch an app, like if I was a VC and somebody came up to me and said, "Hey man, I'm building out this AMM for Mantle," I would say, "Why? What are you gonna do there?" So
The goal is to make some form of money. Fantastic.
the
Right back
goal,
to
well, it
revenues,
is.
baby. Right back to revenues.
Well, it's either revenues or they're getting paid by an incentive program or grant program or something else, or they might be entering Solana to like potentially launch an LST eventually, or have like some validator or something. Like they want to make money somehow, which is why they're going on Solana. I mean, you can't make money on other chains.
I think it's interesting. I mean, it's the obvious kind of, you should want to do this as an exchange with an active user base who wants to trade and take risk. If you're doing perps, you have that, so you should try to funnel them to other products. And Bybit, I don't know if they were risk averse because they could have done this earlier. Binance was the least risk averse, and then Coinbase, it took them some time to do it and whatever. But yeah, it makes sense to try out a chain. It's a nice call option. I assume it's pretty cheap. But the most interesting thing is just the allegiance with Solana. We've said that Solana's disadvantaged because they do not have a chain that they are partnered with. You want someone with powerful distribution kind of funneling new users to your chain. I think Phantom has been that for Solana, and I'm always thinking about like, what matters more, having a centralized exchange or a wallet. I think as a company, you probably want both, but it's good to see that Solana finally has that now. Like the Coinbase base thing, Binance did it first, but then Solana was doing it with FTX, and that was a fantastic relationship. It really got them to where they are. Unfortunately, it didn't work out well in the interim, but it was a really important strategic thing. And now they have it. So we'll see what that does. I think Bybit's the fourth or third or fourth biggest exchange by volume. Not a bad partner to have.
Yeah. Pull up the metrics. We actually have it on Blockworks. But yeah, if you look in recent weeks and months, like Bybit consistently up there regularly in terms of overall exchange spot volumes. Typically, third, fourth position up there. Obviously, Binance, way up ahead of the pack, but by total volume, I mean, they are surpassing Coinbase, for example. So it's definitely a meaningful, from a number standpoint, like maybe the amount of flow that they can push on chain should be very meaningful. I do think it's just interesting that it challenges this notion that everyone in this space seemed to have, that all of these exchanges, like, with what Binance and Coinbase did, there was this kind of assumption that every exchange would go ahead and like launch their own branded chain. And obviously many of them did and kind of tried to do that. But since they're just going to be launching products on Solana directly rather than like creating their own chain environment to do this, I don't know. It seems like they're going just sort of like more directly at the users rather than worrying about this underlying infrastructure question, which I think has been, for the longest time, it's been like the main idea, right? Like you launch your own chain and then you own the whole stack and then you can do whatever you want with it. But I don't know, we're seeing more and more that just like building the best app that you can drive a ton of revenues without needing to necessarily own everything.
Well, before you could make more money by launching infrastructure, and now it's not that anymore.
Yeah, you could raise a lot, right? And now you can just make a lot of money with a good app.
Even without raising, I mean, if you run a 6 month to 1 year airdrop program, you're taking fees.
Yeah.
That's just money into your pocket. And then if it doesn't work out, you say, oh no, it didn't work out. This chain has actually always been separate to us. Therefore, we are launching on this other chain. And it's fine. Like, that's completely okay. I'm not trying to like say that it's morally or ethically wrong. I think it's like, if they want to make as much money as possible, if they can offer a good product, why shouldn't they be able to make as much money as possible? That's not.
Yeah, and I mean, the other part there, I guess, is if you're operating many of the validators in the set, and then you've got maybe validator commissions or the staking rewards earned from that as well. There was clearly some money making opportunity in the past. It was a big thing, but with the dilution of so many chains, like I guess it was kind of a natural outcome to get to this point. But Ryan, I think you made a great point here. Like, and something we've covered recently is like, this isn't the first example of this. Kraken doing X stocks on Solana, for example, like tokenized stock trading with the backed team. But I don't know where I feel like we're seeing a little bit of a trend here. This is something you mentioned that we talked about it, like having those exchange relationships. And now it seems like that the exchanges are like they're just coming on chain on their own terms and going to the best venues at the moment.
And it's under discussed within the ETH debate as well. Like ETH is being pushed to the background by the wallets and the exchanges. It's not the favored place to offboard to, and you need like a foundation that is willing to acknowledge that matters and position to make sure that.
I still offboard through ETH because it's dirt cheap because nobody else uses it.
I made an ETH transaction today. I paid $3, $4.
What did you do?
I mean, that is dirt. I mean, I guess that's one would, depending on what you're doing, that could be cheap.
Depending on how many figs you have, as
I
might say.
Dirt cheap for Ryan Connor. For me, it's half the transaction value.
Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with a notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Be early to Katana by joining the pre-deposit campaign before mainnet opens at the end of this month. Follow the links in today's show notes to get started. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. Follow the link into today's show notes to get started with Ledger today. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I wanted to talk about Pump. I don't know if this is super interesting. Like, I don't know. It doesn't really seem like there's a ton of traction for Avo, for example, but pre-markets for the Pump token went live. There's like no volume on this thing, so I don't know how much you can really use it as any kind of signal. But
Is this Avo?
yeah, on Avo, the current price is listed at $6. I'm assuming they're assuming a 1 billion token supply, which would put it at 6 billion FTV. But the 24-hour volume is 78,000, and the OI is there's only 12,000 in OI, so it's literally zero. So I don't know that we can. I don't know if we can really use this as an indicator. But at the very least, I mean, it seems like this is coming very soon. I don't think there's any confirmed dates out there, but the rumors came out. There was a lot of discussion. Yes, Boccaccio.
It's this week, next week, right? Like it's in either this week or next week.
One would assume, but we've got like no confirmed date. I think even post like Blockworks article about tentative details about sale and whatnot, I don't think there's been any publicly confirmed details from the team yet. So, but it seems like market is like prepared, like this is coming. And I see there's two prevailing themes. It's either like this is the top of all Solana and memes forever, like the PumpFun liquidity event like ruins the trenches forever. And then the other side seems to just be like, why would you not want to own like the most profitable app on Solana or like?
Well, I think you can do both sides, to be fair. Like at 4 bill, it's a buy. But we can also say, I fucking hate Solana, it's going to zero. You know, you can do both sides, I think, here. Like for me, Pump is still a buy. Now I'll assess afterwards, seeing how the chain continues to do, but like it doesn't have to be one or the other. You can buy it at 4 bill, sell it at whatever you want. 12 to 15 is my price target, not financial advice. But it doesn't mean you don't have to think Solana is. I think a lot of people, including me, want for Solana season to be dead because I'm a little bored of it, but it might not happen.
Yeah, I mean, I think based on the current rumors, like if there's if there's 25% rev share to the token, then I mean it would put it at like 30 price to earnings. You could call it earnings because the token wouldn't have any costs necessarily or sales, but
we
it's
need
like
to figure that out at some point as well. That's a huge thing that we don't do at all. Like we don't do any expenses into anything. We just assume it's always zero.
Yeah, I think the difficult part in this scenario is like if hypothetically the labs entity is doing the dev work and they're like eating all the costs, but then they're taking 75% of the revenue and then just like shooting 25% at the token, then like hypothetically in that scenario, there might not be any costs for like the token per se, but in the overall picture, there are obviously costs. It's just weird the way that this plays out, I think.
It's like a tranche thing.
Yeah.
It's like pure cash flow to the token. But then you have to, there's a bunch of assumptions to be had. But
Yeah.
I think I like that you said that you can bet against Solana and bet on Pump. I think more folks should realize that. I think that the people saying that it's over once the token launches, those are the revenue meta people. Um, it's a very backward
And
look.
hyperliquid bulls.
Yeah, it's like
Look,
why
man, Hyperliquid was the correct play. We can start, Ryan, and then I'll do my diatribe.
why would the ICO of a project lead to the destruction of a market? In 2021 rules, maybe that makes sense. People take their money and run and view something as some qualitative top signal, but the market's gotten more sophisticated. Yeah, the revenue meta people are the meme coin is are meme coins are over people, and those are the same folks who said the same thing in February, and then it just didn't happen. No point in investing on what you want to happen. It's what's most will. It's what will likely happen, and I think that giving a bunch of Solana people a lot of money doesn't make it likely that a market will stop functioning.
Yeah, I mean, I agree on that point. Like, there's a lot of what is and what should be type of thinking in this space. Still, I think it's kind of related, honestly, to the narrative versus fundamentals idea as well. But I agree, Ryan. I think the really big question for me is just this. Again, back to revenue. Like, what is the revenue picture here? What is the actual kind of token structure relevant to the labs entity? Like, I think this is going to continue to be one of like the biggest questions going into the next few years of crypto. And as we've seen, we've talked about Morpho a few times in the past few weeks. What they're doing, like, basically buying out the labs entity as a wholly owned subsidiary, like underneath the token, which is pretty interesting. Like, maybe one of the first to go in that like very strong, like token only stance. Would love to see more do that, because I mean, you just have to bake into these extra expectations of, if the labs team is taking most of the revenue, like, are they actually iterating the product? Are they going to continue to build and expand here? You would expect with such like a highly revenue generating application that they would, but I mean, we've seen in the past that the leading app in a category like kind of is a winner and hangs out and doesn't maybe iterate as hard, and then they kind of fall off, and competitors rush in. So I feel like OpenSea might be one of the strong examples there, where they kind of just sort of choked the bag and let like Blur, for example, come in and just kind of vampire and take a bunch of their market share for a time period.
I don't think yeah. I mean, Danny, would you say that there's evidence of them, any evidence of that happening with Pump? Like, the team seems pretty motivated. I think that they have over 50 employees now, and I think you were tweeting over the weekend that the Pump mobile UI is quite good, which is like what we've identified as like the core thing that they need to do to really increase the economics there.
Yeah, I like what I'm seeing. Like, I think they're moving in the right direction. I remember trying the app day one, and it was kind of awful. Like, I don't know why you would have used it at the initial launch over, like a trading bot that have existed for a long time now. But they've been adding features that I think are interesting. And obviously they've got the live streams kind of incorporated in there, and then they have like news and like this movers tab, which is like their own algo for coin discovery, for like tokens that are hot or what have you. Similar to other, like, you've got Photon, like Meme Scope, for example, and Axiom's like, I don't know what they call it. I don't know if they call it movers or something else, but they have a similar thing, right? All of these bots, right? They have their token discovery feeds. But it seems like they've been making improvements in the areas, where I would want to see improvements. And they're clearly like very like strongly focused on this idea of like live streaming and becoming like a kind of like a community platform, which, I won't say is like, there's definitely not like guarantee of success there. I think that's a very hard niche to break into. I've written about this, but if you want that sort of like crazy outcome, and if they are successful, then I mean, then 4 billion sounds like a great price to pay. But we'll just have to see. I want to see them keep iterating.
It's nice that, I mean, it shows you they're also a serious team, and that the token isn't like, it's not a stupid valuation. It's reasonable under most scenarios where you assume certain value flowing which way. So yeah, I think they're doing a lot of the right things.
Yeah, I think 4 bill is fine.
Yeah, what's the target, Bach? 20?
12 to 15. Tranche 1, tranche 2, 20, tranche 3, 100. That's for pump chain.
He's
When
getting out the Elliott wave patterns. He's drawing it up.
Dude, I'm on the Fibonacci's. You wouldn't get it, but the 2.52 free shows that it's going to 100 bill. No, I think
it's going to flip hype, you're saying? Or is hype going to go to like 300?
Like, if pump's at 100, I don't even want to think about where hype is. I mean, Kobe said hype's going to 150 to 200. That's everything I need.
This episode is brought to you by Marinade. Marinade is focused on developing staking technology that strengthens the Solana network and connects SOL holders with the best staking rates available. With solutions for both DeFi and TradFi, including liquid and native staking, as well as direct enterprise integrations, Marinade's high-performance staking delegation platform brings billions in liquidity and security to the SOL market. To learn more, follow the link in today's show notes, and thanks again to Marinade for sponsoring today's episode. AlgoKit 3.0 includes all the tools and open source resources you need to unleash the power and performance of the Algorand blockchain. Access a resilient network with instant finality, consistently high throughput and low fees, and layer 1 features like atomic swaps and native assets. No smart contracts required. Whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, AlgoKit has all the tools you'll need to build faster, safer, and smarter. Start building with AlgoKit today by following the link in today's show notes. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research.
What do you think about the buyback on hype? Is it actually 98% of revenues?
You can see it's all on chain.
Okay, is it? And what do you think about it? I'm not disputing it. I'm not saying I don't believe it. I'm asking you to clarify.
It's 97%. I do this like once a week now because every time people come on, we talk about this. But my thoughts on buybacks in general are this. I get this general idea that if you are a company, you should reinvest in growth. That to me makes sense. You don't expect startups to pay out dividends. But, and this is where I think the crypto like narrative and fundamentals kind of get intermixed. In crypto, value accrual is very difficult. Well, it's not difficult now, but it used to be very difficult. And we've had this like big gap between equity and token, and then equity usually trumps token. So I think in general, most tokens should do some form of value accrual for 15 to 20% because it's a good narrative to have. It means that the token isn't useless. For the hype thing, 97% is quite high, but also it means there's a permanent 2 mil bid per day, which is great. So I'm happy about that, but I do think that there's an argument that can be made that's like, why aren't they reinvesting this into growth? But I imagine they're already quite rich. I think they have a good team. I don't know. Like, they're clearly still working on the product. So I'm not sure if it's going well. So I'm not sure if they have to. I don't know. It's complicated.
Is this they own a ton of the token? So
yeah, they own
30. Token price to go up is like basically being paid a big fat salary.
Yeah, they own 30% plus of the token. So
do they have a foundation with grants and stuff?
They have a foundation. I think they've allocated 0.8% to grants.
It's just so weird that you're making all this money and you want to just give so much of it back. Like, it implies that they're making. You said they're 2 million a day in buy pressure. So they're only keeping 40K.
They're not keeping it. That goes to the HLP.
So they're only putting 40K a day. So they're not keeping any of it.
They
They're
don't
just
keep
going
any
under
money?
with token
They don't
sales.
keep any of the buyback. Well, whatever the fee is, it goes to the buyback and to the HLP. Whatever the revenue is.
Yeah, it's like you're just trading. You're trading for illiquidity, right? Because if they want to fund an acquisition or a bigger business, you have to take the token and market sell it, and then do that thing.
Yeah, or maybe they'll do like an equity deal. I
But
don't know.
then you have to realize gains. It doesn't seem like
To be honest with you, I don't know how they do it. Like this is like they don't even keep 5%, which is a bit insane to me. Like I think if they did 90% buyback, 3% HLP, 7% into like this labs fund or whatever, you get what I'm trying to say. And if it was putting in like it would have had like a mil by now probably.
it'll be interesting. Hyperliquid and Solana. I think that's it. Are probably like getting money managers to talk about them now. Hype a few pretty high profile ones. It'll be interesting to hear them talk about this hype buyback. I'd like to hear their thoughts.
Yeah, we'll see. It's very different to I think a lot of other ways that crypto's been done. This and I think people kind of like it.
Yeah.
It also works towards them. Like a month ago, hype was at $9.
Yeah. I mean, I feel like you mentioned the big question in there is just like if growth needs to involve acquisitions or purchases of certain things. I mean, it's just kind of a question mark, but so far it's been going well. I guess we'll keep watching. Cool. Well, I think we can call it there, guys. Something we didn't talk about.
Will you keep watching from the sidelines?
We'll keep watching. Well, not from the sidelines, I guess. You can pull up the blockworks.co disclosures, and I think there are several team members who are not on the sidelines. I do not own any Hyperliquid, full disclosure.
Ryan, Connor, what about you?
One last topic. It's not a real topic, but next week is permissionless. This is quite literally your last chance to get your tickets.
Take the biggest fucking risk of your life right now.
Come to Permissionless, Brooklyn, next week, the 24th through the 26th. We're all going to be there. A bunch of the Blockworks guys, a ton of the Blockworks guys, the OX Research guys.
I think all of us are going. All of Blockworks Research is going.
All of Research is going to be there? If not, yeah. If not everyone, then like most will be there. Come out and see us. Come out and hang out at the 0x Research Arena. It's for you. It's for the fans. Use code 0x10, 10% off tickets. Link in the description. I don't know what the prices are anymore. Like the ticket prices might even have gone up. So like, get your tickets, come out, see us next week. It's going to be a jam, man. Ryan, what are you excited about? I'm excited to meet Bach and mog him in real life. I can't wait for that.
A lot of the team's going to be there. Global team all in one place. That's what I'm most excited about. Seeing how tall everyone actually is.
I like
Ryan
that.
Connor was shocked that I wasn't short.
A manlet.
He unironically said this to me.
You're not tall, are you?
Well, I'm taller than you.
Define tall. What's tall?
Well, I'm 6 foot. In the general universe, like in worldwide average, pull up worldwide average heights, man. Don't laugh at me, Danny. No, what I'm saying is, I'm not saying I'm tall. I'm saying Ryan met me and said, "Wow, you're not short." I think he expected me to be short.
Come to New York next week. Permissionless. Get your tickets. 0x10, 10% off. Get your tickets. We will see you there. We'll all be there. Have a great night. Have a great evening. Have a great day. We will see you guys next time.